Uh-oh. Looks like America's money printer just broke the sound barrier. And it's monetary Pearl Harbor in Japan. They're handing out free money. Again, J-Pal's over here whispering about ending QT. And gold, your grandpa's safe haven, just got wrecked. And yet, Bitcoin's just sitting there like a loaded slingshot waiting for gravity to flip or gravity to fall. Shout out to Uncle Grandpa. But buckle up, because today we're breaking down the great $38 trillion Bitcoin reset. Because when every central bank on earth is printing and $140 trillion in fiat is hunting just 2 to 3 million Bitcoin available on the open market.
Tackling fuel.
Well, $1 million Bitcoin is not a crackpot theory anymore. It's 10th grade math. Send it. Let's start with Japan. New Prime Minister Sanae Takaichi just ordered a fresh stimulus package. More subsidies, more handouts, more solutions paid for with monopoly money. Electricity and gas subsidies, regional grants, even wage incentives for small businesses. And as a part of it, they're spending billions more on defense and, quote, strategic investments with the U.S., which, translated from politician to English, means we're printing to fight inflation with more inflation. That's a bold strategy, Cotton, because if that worked, Zimbabwe would be the richest country on the planet. And this is the same game everywhere now, a global contest to see who can debase their currency the fastest without the peasants figuring out what's going on. Oh, there it is. The US is basically $38 trillion in debt, and that's before the next bailout, war, or emergency spending bill gets tacked on. That is not sustainable. That is not normal. That's endgame territory. For decades, the dollar's reserve status let America live like a spoiled trust fund kid. Print, spend, borrow, repeat. But that exorbitant privilege is cracking. The dollar's share of global reserves just hit its lowest level in 30 years. Foreigners don't want our paper anymore. China and Japan, America's biggest lenders, have flipped from buyers to sellers of treasuries. So who's left to fund the party? Washington's answer? Stablecoins. You've heard about the Great Reset. Now meet its evil twin, the Great Stablecoin Reset. This is basically the government's plan to repackage the same old debt Ponzi with digital lipstick. They're not fixing the system, they're moving it to the cloud.
Stablecoin legislation backed by U.S. Treasuries, or T-bills, will create a market that will expand U.S. dollar usage via these stablecoins all around the world. And I think that $2 trillion is a very reasonable number, and I could see it greatly exceeding that.
Stablecoins are the new weapon of choice. When someone mints USDT or USDC, the issuer buys real US treasuries to back it. And that creates artificial demand for the dollar, but through private crypto shitcoin rails. And Washington loves it, because if they can regulate stablecoins, they control them. They can literally turn the entire ecosystem into a treasury demand machine. Even Treasury Secretary Scott Bessent said it. A $2 trillion stablecoin market is the goal. And at that size, Tether and Circle would hold more US debt than China and Japan combined. You can't make this up. They're basically saying we can't sell enough bonds the old-fashioned way. So let's coerce stablecoin issuers to buy them. And while Washington tries to duct tape the treasury market with stablecoin witchcraft, the real story is happening in the background. The largest monetary detonation in human history already happened, and most of the world slept through it. Global M2, the total money supply, is now $140 trillion, up almost 8% in just 6 months. That's $10 trillion in fresh liquidity since spring. That's not stimulus. That's debasement. Stimulus is actually useless. Every new dollar, yen, euro, and peso printed steals from existing ones. You don't really see your wallet shrinking, but your purchasing power is bleeding out faster than a fiat economist's credibility.
The issue that has always swept down through the century, and that will have to be fought once again, is the people versus the banks. Mm-hmm. And I think it's a quote that defines the moment that we're in. Ultimately, the banks and the bond market have won for 40 years. Economic policy in this country, be it what the Fed has done with rates, be it with the offshoring of the industrial base to lower deficits, to lower inflation, reduce costs, et cetera. It has all been done with one goal in mind, which is to subjugate the U.S. middle and working class to support the real value of the bond market and by extension, Wall Street. And that has now been taken too far. And so if we want to be where I think most Americans would agree we want to be, then yeah, pain is all in the eye of the beholder, right? It's something I say all the time is, what's normal for the spider is chaos for the fly, right? If you if you own lots of long-term treasury bonds, what I'm advocating would be very painful.
If you own Bitcoin,
if you own gold, if you own productive businesses, if you're a working class person whose wages are going to rise as fast or faster than inflation, maybe for the first time in 50 years, that's not as painful. And I think as a country, we wake up and you have a more rebalanced economy, a more self-sufficient economy where you're not as reliant on potential adversaries for key things. It's tricky. It's bumpy. There's no guarantee it's going to work. We've let it go on so long. It's a little bit more market-driven, paradoxically, right? Ultimately, if we do those things, there should be more inflation. But that inflation is a market signal telling us, hey, you've underinvested for 40 years in your industrial base, in your working class, in your skilled trades, in your young people. And now you need to catch up. And doing that is going to be inflationary. And that is just the fallout of the decisions we've made over the last 30, 40 years.
And Fed Chair Jerome Powell just confirmed that quantitative tightening is about to end. He said, quote, "We may approach that point in the coming months." Translation: we've drained all the liquidity we can without completely breaking the system. The banking system's out of spare cash. The Fed's reverse repo facility, their overflow account that held $2.5 trillion in excess cash, is basically empty. And the regular repo market, where banks borrow overnight, is starting to spike again. And that's exactly what happened in 2019 before the Fed quietly restarted QE. When the repo market screams, the Fed prints every single time.
Expect that the process of getting inflation sustainably down to 2% has a long way to go. The labor market remains tight, although improvements in labor supply and a gradual easing in demand continue to move it into better balance. GDP growth in the third quarter was quite strong, but like most forecasters, we expect growth to moderate in coming quarters. Of course,
by refusing to treat climate change like a systemic risk,
thank you.
You are putting us at
Thank you very much.
economic disaster.
Thank you very much.
Climate change
Yep.
will threaten.
Thank you. Just close the fucking door. Close the door.
That clip is a total classic, but now we're right back in the same trap. Rates too high, confidence collapses, they print to save the system, inflation returns. Rates can't drop, they print again. And that's what the European Central Bank and Ray Dalio call the debt doom loop. And the US is leading the parade. Yeah, leading the parade in a giant clown suit. Interest payments alone just hit $1.2 trillion. That's 1/5 of the total US revenue. That's like maxing out your credit card, then taking a payday loan. And that payday loan is just there to cover the interest. But don't worry, the experts say it's under control. There's only two options here, print or die. At 235% global debt to GDP, the menu is simple. Default, but that would be political suicide. Austerity, but that would be economic suicide. Or print, that's a thermodynamic inevitability. They chose print. They will always keep choosing print.
Bitcoin is the very simple story. They are never going to stop printing money, so therefore Bitcoin will never stop going up. And if you simply think of Bitcoin as savings technology, all you have to do is go out, work hard at your job, make money, spend less than you make, and then put the extra savings into Bitcoin, and then allow Bitcoin to benefit from what we know is going to happen, which is they are never going to stop printing money. And I think that simplicity is actually very attractive to some cohort of investors. And now you see investors saying, wait a second here, this quote unquote debasement trade means that I don't have to go do all that work. I can simply just go and buy something like Bitcoin. And I think that really maybe the story of finance of this decade is that Bitcoin is becoming the hurdle rate, right? Historically, we've looked at things like the S&P. If you go back to 2020, the S&P is up 100% since 2020. Priced in Bitcoin is down 90%. All of the returns that people are talking about in traditional finance, most of them are negative because no one can beat Bitcoin. And so if you can't beat it, then we just say you got to buy it. And I think that's what a lot of investors are starting to do.
Every regime in history has done the same thing. It's the physics of fiat. Once you cross that debt Rubicon, there ain't no going back. You can't not print. And here's the mechanism nobody in mainstream finance wants to talk about. When global M2 expands, Bitcoin doesn't immediately react. It lags. It's like a volcano. There's a silent buildup, and then a boom. In 2020, money supply exploded, and Bitcoin followed 9 months later with a 6x rally. Now, M2 is up 7.8% year to date, and Bitcoin's lagging again. History doesn't repeat, but it rhymes, like Eminem with a hardware wallet. This isn't inflation. It's a wealth transfer from infinite ledgers to finite assets. Every 1% expansion in global M2 historically equals about 2.8% upside for Bitcoin. And at 7.8%, that's plus 21% before adoption and reflexivity even kick in. Do the math. The lag is the signal. The explosion is the sequel. Gold just had its worst week since 2008, down 6.4% in a single day. And that's not a panic. That's a rotation. Even PayPal's former president, David Marcus, said it. Sell the gold, buy Bitcoin.
AI and crypto czar David Sachs saying his first priority is exploring the possibility of a strategic Bitcoin reserve. Joining us right now in an exclusive interview to talk about that and so much more. David Marcus, he previously led crypto and payments at Meta, is the former president of PayPal. He's now CEO of Lightspark, a company he launched in 2022 that's building payment infrastructure on the Bitcoin blockchain. Good morning to you. It's been a while, but it's nice to see you, David.
Good morning.
Let's try to, we're sort of seeing this revolution, at least inside of Washington, it appears, around how Congress and how this administration is going to think about crypto and specifically Bitcoin and how you think that things might manifest. If you could just sort of walk us through the permutations in your mind from a regulatory perspective, not just on the regulation, but also on the strategic reserve and things like that, how this changes things.
Well, it's a brand new day for crypto in America, frankly. And speaking as someone who tried to launch a project and worked really hard to get it off the ground here at home and having it shut down by the U.S. government, to having conversations about regulatory clarity, a Bitcoin strategic reserve, and really doing whatever it takes, frankly, for America to lead in this revolution that will completely rewire our whole financial system, is quite a polarity flip of atmosphere and energy for our entire industry. So, I'm very, very happy and excited for what's coming. I think we're very close to the precipice when it comes to falling behind here. And so it's really amazing to see.
What does the strategic reserve do in your mind?
Well, look,
besides push up the price of Bitcoin.
Well, I think, first of all, if you look at the strategic reserves that the U.S. government holds in gold, we're the number one holder of gold in the world. And arguably, if you think of Bitcoin as a better version of gold, digital gold, why not allocate a portion of that reserve or rebalance a portion of that reserve to the better version? And, I think, there's just a lot more opportunity for growth and appreciation of Bitcoin than gold in the next couple of decades. So I think it's a wise decision, potentially.
Capital doesn't die, it migrates. ETFs like BlackRock's IBIT just blew past $100 billion in assets under management. Wall Street isn't fighting Bitcoin anymore, it's front-running it. Add in the corporate treasuries, you got MicroStrategy, Trump Media, all the other crap. CFOs stacking harder than plebs on a payday. Macro legend Luke Groman says it flat. Sovereign insolvency in slow motion. The only way out? Debasement. China's dumping treasuries. BRICS are building gold rails. The dollar isn't dying, it's retiring. and Bitcoin's taking her gerb.
Brent's milkshake theory is absolutely correct around initially gold going up with the dollar. Something I posted a long time ago on X, and people familiar with the FOFOA blog and the readings of Monetary Theorist Another and Friend of Another will recall that in the late 1990s, another friend of another said that when the dollar system is coming to the end of its life, you will see the dollar and gold rise together. That will be the sign that the dollars, because people will be getting squeezed into the dollar at one hand, but they'll also be getting out and going into gold. And so when those two things are rising together, that's the symptom of the end of the dollar system. That was said 30 years ago, almost 25 years ago. And so, yes, the milkshake theory will see the dollar squeeze higher. I get it. And gold as well. And gold, once it hits critical tipping point of price, and I don't know where that price is, but you can see hints of it. Albert Marco on X has said, hey, above $3,000 on gold, it starts to create a problem for the dollar. He was right. The dollar went down to 96. It says above $5,000 on gold, it creates a problem for the dollar and for the treasury market. He's probably going to be right. And the point here, or what he's saying when he says that, is ultimately, yes, there is this, we've talked about this, $13 trillion dollar denominated liability out there, right? In terms of foreign borrowed dollar debt, that when the dollar goes up, it squeezes people into that. It forces them to sell treasuries. It forces them to sell U.S. equities to raise the dollars to get that. Well, once the price of gold gets high enough, it starts to fully collateralize their dollar liability on the other side. And suddenly, it starts to provide the liquidity. It starts to be the sink. And that is how you circumvent. The gold is how you get out of the dollar system. And that's why a friend of another said all those years ago, when you see them go up together, that means the dollar is coming to its end of life. This present form of this dollar system is coming to the end of life. Now, does it mean the dollar's going to die? No. I'll be using dollars, and your and my grandkids and great grandkids will still be using dollars. They're just going to buy us a lot less, and certainly in gold terms. De facto, we can see gold with today's price move has overtaken treasuries in global central bank reserves. Right, so there's now more gold in global central bank reserves than there are U.S. treasuries. How do you sit there and argue and say it's not overtaking the dollar in the system? To me, that's crazy. Now, will people still use dollars? Of course. Why? That's just Gresham's law, right? I hear people say, well, it's still dominant. 90% of currency usage, that's dollar dominance. Great. So you're spending, you're telling me it's the bad currency, right? I'll spend dollars all day long because there's a terrible store of value. But if the whole change of structure we've been talking about for years, and I mean, if you look at all my posts, all my podcasts, everything I've ever said, I've never said end of dollar reserve status. It's end of the post-71 structure of dollar reserve status, which is dollar as primary reserve currency, treasury bond as primary reserve asset. It happened. It's happened. The dollar is still primary reserve currency, but gold is now primary reserve asset as of probably this morning with the $100 move. And I don't think it's ever going back unless, she suddenly decides to be, Yeltsin and, sell off his country for pennies on the dollar to American, corporate and Washington interests. And Putin decides to do the same thing because we can't go to war to stop him. The rare earth thing ensures it.
Powell's pause isn't policy, it is surrender. QT ends because the bank plumbing's dry. And every new dollar printed from here is just tackling fuel for Bitcoin.
Tackling fuel.
Now, before we bring it home today, look at our likes.
3 or 4 times, maybe. I gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a quick second for our sponsors who keep this show on the air over at the Bitcoin Way. If your wealth lives in their system, it's not yours, it's theirs. That's why we scream Bitcoin. That's why you self-custody. And that's why you call our friends over at the Bitcoin Way. They'll walk you through multi-sig, self-custody, privacy, how to run a node, and the tools that keep you sovereign when the fiat system pulls the plug. Don't wait till it's too late. Book a free 30-minute consult today using that link in the show notes. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018, and they were the first to offer proof of reserves. With Ledn, you get custody loans, no credit checks, no monthly payments, and more. Visit learn.ledn.io/simply to learn more and get 25 basis points off your first loan. 38 trillion in debt isn't a liability, it's rocket fuel. Gold 30 trillion, real estate 300 trillion, global M2 140 trillion, Bitcoin still under 3 trillion. Do the math. When even a sliver of that tidal wave hits, you get banana zone. Welcome to Weimar. Every fiat empire ends the same way, with inflation and excuses. The difference this time is we have an exit. The Great Reset isn't coming for Bitcoin, it's coming because of Bitcoin. They can digitize debt and rebrand it as innovation, but they can't reboot the truth. 21 million is a mirror held up to every liar in a suit. While they print to survive, we stack to thrive. Stack hard, stay humble, and get those tickets to Mining Disrupt 2025. Get those tickets to Mining Disrupt 2025. See the future of Bitcoin mining up close in Dallas, Texas, November 11th through the 13th. The biggest names in the industry. Cutting edge rigs, Bitcoin, and AI integration, the signal you won't get anywhere else. Grab your tickets today and use promo code SimplyBitcoin for 20% off, and we'll see you there. Hey, hope you guys enjoyed this one. Smash the like, subscribe, and give us a pamp by sharing the Sound Money Gospel. Set those notifications because we got tons of great stuff coming your way. Keep your head in a swivel. Love you guys. Catch you next time. Peace.
If you prefer to go down with the ship, you.